So what if you could invest in Dubai's incredible real estate market with just a 20% down payment and then pay absolutely nothing else until the property is built and literally ready to make you money? Well, today we're going to break down a really powerful 2080 payment plan in Jumeirah Village Circle that's doing just that, turning smart investors into property owners. Okay, first things first, let's set the scene. This right here is Jumeirah Village Circle, or JVC, as everyone calls it. And this community hasn't just grown, it has absolutely exploded into one of the most strategic investment hubs in all of Dubai. Let's dig into why. I think this is a question a lot of us have asked ourselves. You see this amazing growth happening in a city like Dubai, and you want a piece of the action, but the price tag just feels impossibly high? Well, what if there was another way in? And that brings us right to our first section, the JVC advantage. We're about to unpack the secret sauce that makes this community the place to be for investors who want that perfect blend of growth, quality, and, this is the big one, affordability. Location, right? It's everything. Well, JVC's position is kind of perfect. It's tucked right between Dubai's major highways, which means you can get to key spots like the marina, downtown, or the airport in just 20 to 25 minutes. For anyone living or renting there, that kind of connectivity is a huge plus. Now check this out. This is just raw data, but it tells a story. Property listings in JVC are pulling in a massive 214,000 page views. To put that in perspective, that's actually more than traditional hotspots like Dubai Marina. The online buzz is definitely real. And all that online attention, well, it translates directly into your bank account. Investors in JVC are consistently pulling in annual rental yields between 7 and 9%. Let me be clear. Those are incredibly strong numbers. Most global real estate markets would kill for returns like that. But look, it's not all about the spreadsheet numbers. JVC is a real community. It's got over 30 landscaped parks, which means it offers a quality of life that attracts the best kinds of tenants. The long-term ones, like families and young professionals who want some green space along with their city access. And this slide right here, this is the sweet spot. Your entry investment is way lower than in prime areas like downtown, but the rent you can command is still super competitive. So what you're doing is offering a premium lifestyle for just a little less than the city average. And that creates a constant, reliable demand from really good tenants. Okay, so we've established why JVC is so hot right now. But now let's get into the how. This is the financial tool that really unlocks the whole thing. The 2080 payment plan. It's a total game changer. So before we get into the nitty-gritty, let's just be crystal clear on what this is. We're talking about a financing model that comes directly from the developer. And the key benefit? You don't need to get a traditional bank mortgage while the place is being built. This is huge, because it means your money isn't all tied up, leaving you with more flexibility and, frankly, a lot more peace of mind. And the mechanics are brilliantly simple. It's so straightforward. You put down 20% to lock in the property. Then, and this is the magic part, you pay nothing, absolutely zero, for the entire time the property is under construction. The final 80% chunk is only due when you get the keys in your hand at handover. It's simple, but it's incredibly powerful. Alright, so we get the plan, but now let's talk about the profit. How does this simple 3-step structure actually turn into a real financial advantage for you? How does it help you build wealth? Okay, this is where it gets really exciting. First, that low entry barrier means you're in the game without tying up every penny you have. Second, while you're paying nothing during construction, your asset is actually going up in value, often by 20 to 30%. And here's the real kicker. You can start making rental income that helps you cover your financing costs. Oh, and you get to do all of this in a completely tax-free environment. Theory is fantastic, but let's get real for a second. Let's look at some actual numbers. We're going to take a typical, good quality, 1-bedroom apartment in JVC and see exactly how this plays out in the real world. So look, the math here is super clear and really compelling. On a property that costs just over 1 million dirhams, you can realistically expect to bring in about 67,500 a year in rent. And even after you factor in reasonable service charges, you're still looking at a gross yield of 6.4%. That is a fantastic return in a stable, growing market. Now, of course, with any amazing opportunity comes responsibility. This is not a get-rich-quick scheme. It's a strategic investment, and that means you have to be smart about it. So let's talk about due diligence, doing your homework. And this is exactly why doing your homework is completely non-negotiable. This statistic is a pretty sobering reminder that not all projects are created equal. Your job as an investor is to figure out which ones are the real deal, to find the projects that are built to last, both physically and financially. So here's your cheat sheet. This is an actionable checklist. First, dig deep into the developer's history. Have they delivered on time before? Next, use official government tools like the RERA rent calculator. That's from Dubai's real estate regulatory agency to check if the rental estimates are realistic. Don't just trust the glossy brochures. Third, calculate your net yield after all service charges. And finally, stress test your numbers. What if the apartment's empty for a month? You have to plan for that. And on the flip side, here's what you have to avoid at all costs. Don't ignore the risks of project delays. Don't get stars in your eyes and overestimate your rental income. Don't, for the love of God, compromise on build quality. And please don't forget that service charges eat directly into your profits. Avoiding these mistakes is just as critical as finding the right opportunity in the first place. Okay, so we've covered the opportunity, we've covered the financial mechanics, and we've covered the risks. Let's wrap it all up with the final word on why this combination of JVC and the 2080 plan is just so powerful. So what's the single most powerful thing here? It's the cash flow. With the 2080 plan, as soon as you get the keys, your tenant's rent check is immediately helping you pay for the financing on that final 80%. Your tenant is literally helping you buy the property. That's a dynamic that's just impossible with a traditional mortgage from day one. At the end of the day, what we're looking at is this rare, beautiful combination of accessibility and profitability. It smashes the barrier to entry for getting into a premium market, but it absolutely rewards the people who are diligent, who do the research, and who treat this like the serious business decision that it is. And that really just leaves us with one last thought. With the financial barrier to entry this low and a clear, proven path to generating profit, the only real question left is, could an opportunity like this in JVC be the next big step in your investment journey?